Okay, guys, there's something I wrote some stuff here that I want to share with us that I believe will help us. Is on time frame. Time frame. There's a video I made on time frame analysis, time frame correlation. I said that time frame, you must make sure that whatever is happening on the higher time frame is what is happening on the lower time frame. If daily time frame is saying buy, your 5 minutes must be telling you buy. If your 5 minutes saying sell, your analysis, there's something wrong with your analysis already. Now I want to read something. Listen. You say always remember that the movement on the smaller time frames are controlled by the movement on the larger time frames. You get it? Always remember that the movement on the smaller time frames are controlled by the movement on the higher time frame. So whatever is happening on the smaller time frame, or rather on the higher time frame, is what is happening on the smaller time frame. So if you are seeing buy on your 4 hours, you should be seeing buy on the 30 minutes, on the 15 minutes, or the 5 minutes. And again, I want to say something. You say prices on a smaller time frame respond to the market, to the movement rather, on a larger time frame or higher time frame. Prices on a smaller time frame respond to the movement on a higher time frame. What does it mean? It means what is happening on the smaller time frame is going to respond or correspond to what is happening on the higher time frame. So when you are analyzing the market, I don't know if I can draw this for us to see. Okay, I don't know if you can see my book. So if you are, let's say come in. Okay, let's say USDJPY. That's my favorite pair for now. I can change it. I'm watching USDJPY and GBPUSD for the now. Let's say USD, is it showing? Kilo day. We'll manage them. USDJPY, I also buy board. That's small. Then GBP. Okay, USD JPY, GBPUSD. Well, I think let's just go with USDJPY. Now let's say, for instance, we have a bullish trend, higher high, higher low, higher high. Is it showing itself? Oh wow. Higher low, higher high, higher low, higher high. This is, let's say, 4 hours, right? Oh, now what? Let me see if it will show you. Okay, we'll manage it till I have something better. Okay, now let's say this is 4 hours, right? 4 hours. Now, this is USDJPY, don't forget. USDJPY. Now, whatever is happening on these 4 hours should be, and again, you know that every bullish trend has break of structure. So for this trend to continue, there must be a break. For a higher high and for a bullish trend to continue, but there must be a break of structure. Always remember. Now this is a break of structure here. There's a break of structure here. There's a break of structure here. There's a break of structure here. You get it? Now then, for a bullish trend to maintain being bullish, there must be always a protected low. This higher low must be protected. You see now, this low is protected. You see this low is protected. If there's another one here now, this low will be protected also. This one will come here, go up again. You get it? So it's bullish. So the lows are protected, the highs are broken, which is the break of structure. So we have weak highs and strong low for bullish trend. For every bullish trend, we have weak highs, then we have strong lows. You get it? Yeah. Now let me clean my face. Okay. Now so we're talking on time frame. So for this for you to take a trade, because you know we don't take trade on 4 hours. There are people that take trades on 4 hours though, but personally for me, I take my trade on 30 minutes, 15 minutes, sometimes 5 minutes, but rarely. I measure more of 15 minutes and 30 minutes. I love those two time frames as entry points, POIs. Okay, now 4 hours is showing bullish. Now, if your 30 minutes or 15 minutes or 5 minutes is saying bearish, your analysis is wrong. Trust me, guys, your analysis is wrong, because whatever is happening on the higher time frame should be what is happening on the lower time frame. What do I mean? So your 15 minutes now, and you know that there is always minor structures. Now, if you move from these 4 hours to, let's say, 30 minutes now, you won't see this same thing again. You won't see this same candle again. You will see it, but there will be other, because inside this move, inside this higher high, higher low, higher high, higher low, there are other candles inside. There are other candles. Oh my god, I need a good board. Don't worry, guys, I will get a board that can be teaching. I can be used to teach very well. But for now, let's manage this. Under this, we have other candles inside. We have other candles inside. Now, if you move to 30 minutes, what you will be seeing will be different candle. You'll be seeing different break of structure. Inside this break of structure, there are other break of structure. You see it now? So you'll be seeing all those break of structure. So it's your responsibility to now, first, you have to measure on your range. Oh my god. You have to measure on the range you want to take your trade from. Very, very important. Measure on the range you want to take your trade from. Now, what do I mean by range? If you are looking at the chart, let's say the market ends here. Let me draw it again. We have higher high, higher low, higher high, higher low, higher high, higher low, higher high. The market ends here. It came from down. It came from this side, and it ends here. You can't be measuring. You can't measure on everything again, because this is the past. We are talking about the future. You grab? Okay, this is the past. This is the present, rather. This is the present going to the future. You get it? This is the past of the market. Past. This is the present. Where the market is at the moment is the present. Then the market is going to the future, which you can't really tell yet. But from the present, we can dictate, we can analyze what may happen or what can happen. So what you are going to measure, or you measure on the last low, last high. So the moment you've drawn this thing, you can draw it on your 4 hours, come to 30 minutes and still find it and draw it. Because whatever the market is saying on your 4 hours is what it's saying on your 30 minutes. You just have to see it. You just have to see it. Now, oh, can I continue? Okay, let me see what I can do in the next 1 minute. Now, you measure your range. Now, this is your range. From this your high and this low is your range. So what you are focusing on now is just within this area. Whatever happened in the past is not your business. Whatever is going to happen in the future and the present is what you are focusing on. So from this range, you cannot bring your Fibonacci 2, drop your Fibonacci 2, then you know that okay, this is the market is already in premium. And this is, when you bring your Fibonacci 2, we have premium and discount, which we all know. Now, if you bring your Fibonacci 2 now, you already know okay, market is in premium. And again, what you must understand is you must know that in this thing is a business. And what do you do in business? When you want to buy something, for instance, somebody wants to buy an iPhone, and they say iPhone is let's say I don't know, maybe 1 million, maybe iPhone 14 1 million for instance, and you heard that in the next 2 months iPhone 14 will be, let's say, 500,000. What will the wise person do? You can actually wait for the 2 months. So in trading, you buy when it's high, when it's expensive, right? Am I right? You buy when it's cheap, and you sell when it's expensive. Oh yeah, that's the right placement. You buy when it's cheap, and you sell when it's expensive. So you don't buy just in the middle. Sometimes buying in the middle is not really the best. You buy when it's cheap, then you sell when it's expensive. So when you see that the market have gone to a very very high point and there's a high chance of the market reversing, that's when you should be selling. Then when the market has come to a very very low point and the high chance of the market or buying, then we should buy. So buy when it's cheap, sell when it's expensive. We're going to continue on this video tomorrow. Bye for now. King Roy.